Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I have a very special guest, a repeat guest, a guest that I've had many times and hope to continue to have in the future. He is Mr. Lior Gantz from Wealth Research Group, which is available on the web at wealthresearchgroup.com. You're going to want to check that out, and you're going to want to watch this whole video because there's so much to talk about. I'm really excited about this one in particular. Lior, welcome back to the program, sir.
Thanks for having me.
Yeah, it's always great to have you. You are a wealth of information. People always leave so many comments, positive comments, and I want people to comment on this video below. Let's hear what you have to say about all the topics we're going to talk about today. All right, so let's get into it. Lior, you've been on the show a number of times, as I mentioned. You got your subscribers into ETH at $12, BTC at $400. Monero at $19. I mean, you showed me some of the responses and the thank yous that you received, just like you received so many in the comments on my videos. Now, some of these responses talked about gains in the hundreds of thousands of dollars, paying down 30-year mortgages, luxury vacations, you name it. It's been incredible. Could we expect to see anything as epic as this in 2018?
My answer is no, definitely no. We'll probably not see it from any asset class in the next 10 to 20 years. What we saw in 2017 from cryptocurrencies, from ETH, Ethereum, like you said, look, in March of 2017, when we pounded the table at the Wealth Research Group letter about Ethereum, it was $12. It was about $300 or $400 by September, then more than $1,000 by December. These type of returns, they're generational, maybe even multi-generational, once in a century type returns. In 1 year to make from $12, even if you were late and you only took our suggestion 2 or 3 months later, you still more than quadrupled your money 5 times, 10 times. Some people made 80 times their money. Even with a small $1,000 position, making 50 times your money, that's a big chunk of cash. Bitcoin the same way. Monero, we covered Litecoin at $20. It went to over 300. These types of returns are sensational. So do not get accustomed to it. And anyone that comes from a stock market background like I do, where 15% returns annually, if you can get those on a consistent basis, you're hedge fund material. For 18 years I've been a full-time investor since the age of 16, and last year to me, to someone who was coming from the stock market, that seems so abnormal that I kept selling on the way up, because obviously every time it doubles, you take a little home, you put on, you cash up all the time, and it keeps going up. You cash up a little more, you take profits. By Q4, you're out. You're not waiting to see it go to 100,000 or a million. Like when people say that they're gonna cut off their testicles or go bald if it reaches a million, you're in a bubble. So when all these people start to bet on the price and say, if it's not a million, I'll jump from this building, etc. That's hype, and you need to be out. So definitely cryptocurrencies, I don't see them doing anything as remarkable as they did. And if anything, cryptocurrencies are going through an identity crisis right now. They need to figure out what they're doing and get more niched and more specialized in what they do. Each crypto project, each of these digital projects needs to understand who's its target audience and what can it deliver, what kind of value. Otherwise, it will go belly up. And we've talked about this many times. There's 1,500 of them. Consider them like 1,500 businesses. And if they all do the same thing, then one outcompetes the other, or they just all become very non-competitive, and therefore there's a price pressure to go down. It's no different than any other industry. Take the automotive industry. You can see companies like Mercedes-Benz. It's a luxury brand. You would consider, you would think, hey, no one can disrupt them. Well, unless there are other luxury companies that come into the market, BMW, Lexus, Infiniti, etc., then the profit margins go down. So unless a crypto project is able to create an enduring competitive advantage, it's going to start seeing a lot of price pressure going down because other crypto projects will just buy it out of its market cap. If they all can be transferred easily across the world with low fees, very high anonymity, then they're all basically the same pie, right? So if they all have the same attributes, then there's nothing to disrupt me or you than from getting into the market and doing a David and Lior coin, for example, which is going to be fast, cheap, etc. So they need to figure out where they are standalone, what they can do different from other projects, and then they can shine, because there's no speculative appetite anymore to just come in there and fund them. When you buy a cryptocurrency in the hopes to make money out of it, not to use it as a currency, because when you buy dollars, you're not going to say, I'm going to become wealthy by buying a dollar. But some people thought they will become wealthy by buying cryptocurrency. That's why it was a speculative era. A currency overall is a means of exchange, right? A medium of exchange. So unless some of these projects have more to offer than a currency, then they will stay stabilized like they are. You see that in the last month. I mean, they're pretty stable. They're not moving as they did in 2017. So that's kind of the short, long answer. Obviously, regulations are playing a part here. The G20 meeting taking place this summer will kind of lay the framework for the regulatory bodies for them. And obviously, cryptocurrencies are not going away. They have their own place, and they have a value proposition for many people. Getting some of their money out of fiat currencies is very important. And yeah, so that's basically it, David. Cryptocurrencies as a whole, if you want to research that subject, I would definitely make sure you go to wealthresearchgroup.com/rocket, ROCKET, and it's a whole bunch of manuals that we aggregated in 2017, 2018 that talk about cryptocurrency, how to do it right, and I am much more bullish on the blockchain technology because that has much more use cases. It has no regulatory clout, no one's disrupting it, and I am very much researching blockchain use cases which are even outside of the financial sector, so not only currencies at all.
Absolutely. I want to talk about some of the other incredible picks that you've made. A number of weeks ago, you pulled the trigger on first mining gold on my show at 44 cents in Canadian dollars, and it rallied more than 22%. Incredible. And listeners booked an annualized gain of more than 154%. Then in May, you were a guest here.
Sure, because it happened in the space of a month.
Yeah, it was incredible. Yeah. Then in May, you were a guest here and boldly claimed that you're calling the bottom on a company called Wealth Minerals Corp, and that was at $1.08 in Canadian currency. And
$1.08.
Yeah, $1.08. Yep, that's right. And I remember that rallied 25% in 3 days.
Sure.
I mean, yeah, you nailed that one, and especially with the S&P 500 pretty much doing nothing this year. So what's your next winner?
Well, you know what? With the resource sector, because these were both resource companies, 2016 was a big year for resources. The first 8 months, incredible gains. Wealth Research Group was launched in early 2016, and we covered 12 companies that went over 300% in the space of 8 months there. And then we kind of shifted into cryptocurrencies in 2017. 2018, if you want a bottom pick, you can do it in the resource sector, like these two plays, First Mining Gold and Wealth Minerals, for example, were plays that were so deeply depressed in valuations that they had to have a bounce or a rebound up, a 25% rebound up, because they had too much support at those levels, and I follow them so closely. I talk to the CEOs and the chairmans, and I know these companies in and out. Now, if you want a rally, not a bounce, but a big rally that can happen starting immediately, and take a year or two. So a trend, a really big trend. The two biggest trends that we see in Wealth Research Group are cannabis, due to the thanks to the legalization that's going to take place in Canada, which I believe will cause the United States of America to federally legalize, because they can't afford to lose so many jobs, tax revenue, export licenses, because Canada is going to start importing cannabis. And one of my partners is right now in Denver conducting very, very intensive due diligence on companies over there in businesses. So that's one thing. But the bigger trend, in its infancy right now, but it's going to be a major, major profit niche, a sector in and of itself, is the artificial intelligence revolution. And so many companies are just starting to get into it. And so whoever has a first mover advantage right now, David, and is ready to commercialize, monetize AI, not just come up with ideas, but already have clients in place and start selling and licensing software. I mean, this is like Google early days. This is like being at the IPO of Microsoft. This is the early days of artificial intelligence, and no one is doing anything about it because it's very hard to find a company that is actually a pure play artificial intelligence company. So I am, for the past, I would say 60 days, going back and forth every day with a person who was named CEO of the Year in Canada, one of the 50 most influential people in Toronto, a multimillionaire on his own right, and he's now founding a company called Global Live Technologies. It's going to start trading most likely on the 13th. So on the 13th of June. I know we're doing this interview on the 10th. So this will most likely start on the 13th, the trade in the venture exchange, so the TSXV, under the ticker LIVE, L-I-V-E. And that is by far my biggest position. I've never collectively with my partners put over 7 figures into an IPO, and we're going to be buying in the first 2 weeks an accumulative 7-figure position. So this is big. We believe that this company is going to IPO with a very, very favorable valuation. In fact, we think that the IPO is about 3 times cheaper than the market cap, so than the intrinsic value. So we believe that if it will start bidding around 150 to 200 mil Canadian, they have, according to our internal assessment of the company, we believe that the intrinsic value is about 600 to 700 million Canadian, and therefore we are definitely buyers if the IPO price is going to be substantially lower than 600 to 700 million, which we believe it will be. But you never know. It's an IPO, so who knows, right? But this is a big play. Anthony Lacovera, the founder, the CEO, he controls 40% of the float. So 40% of the company is, you talk about skin in the game. The guy has already committed about $15 million in cash already as a private company, owns 40% of the company and 70% of the voting control. And, when this guy has 20 years of developing softwares, and he's the first one that's going to commercialize AI coupled with decentralization through the blockchain technology. In my opinion, this could be the biggest performer for the Wealth Research Group letter since inception, and I know we've done a 90-fold return with Ethereum, etc. Dashed 40 times people's money, but with cryptocurrencies, these were symbolic figures. So people would put $500, $1,000, $1,500 into this because they were illiquid at that point when you start to get into them. But this company, it's a publicly traded company. It's not an ICO. It's not a cryptocurrency. It's trading on the market. It's going to have a U.S. ticker a few weeks after the or a few days, who knows, after the IPO. There's a liquid company. You can get in there, and if you do your due diligence and you see what this company is about, you can go to wealthresearchgroup.com/live, like I said, and it's a company vetted, management vetted overview of the company. They're going to roll out with JVs, and that's the beauty of it. So if you know, I was involved with so many tech companies over the years, seeding them, advising to them, etc. Their biggest problem is to find a customer. So, you know, figure you and me, David, we work on Microsoft Word for 20, 30 years, right? Since we started typing. If somebody comes up and says, "Hey, I have a better Word for you," are you gonna move to a better Word? Probably not, because you're so habitualized on what you do. You love your word processor. You're not going to move that easy. Same with a phone. It's kind of hassle to change technology. So software companies have a really hard time, even if they have great softwares, convincing people to move to their software. So they either need to cut prices and make no money, or they need to joint venture with other companies that have existing customers and go that route. And that's exactly what Anthony did. And I think the beauty of it is you get your foot in the door and you start selling your projects to the JV partners, to the clients of the JV partners, and then you start to give them new products all the time and licensing products. Because as soon as you already have them, then it's easier to kind of give them and introduce new products to them, because they're already existing customers and it's very hard to leave. So that's what I think the brilliant of his business model. And then the other part is he is the chairman of about 6 or 7 incubators and accelerators. So he has his hands are tied with many talented young people through these tech accelerators and incubators, and he can use and leverage those to create new product offerings for this company. So I am just extremely excited. I've never done so much research into a company. Anthony, you can check him out online because he has his own Bloomberg show, David. This guy is super legit, the most legitimate CEO I've ever had the privilege of working with. And this is going to be a company that Wealth Research Group covers for years. So big deal for us. We're very excited right now, for us, for subscribers, for everyone.
Yeah, people are always asking me about IPOs, what's going to be the next big one. Of course, we cannot make any guarantees, but I believe this one is going to be explosive. And I believe in AI, artificial intelligence technology. What is so disruptive about AI? Why are we focusing so much on it?
Well, consider this. AI is machine learning or supercomputers. In about 5 years, they're going to have quantum computers. Quantum computers are going to be able to hack the Pentagon, hack any modern day computer. So this is going to disrupt security and software and all the tech industries. It's going to disrupt everything. So and it's going to happen with or without us, right? So either you go to the career path and look for a career in AI because it's going to have very high salaries, or you invest in it. So obviously, as an investor and a venture capitalist, I want to get involved with the best as early on as possible. Just like Google was the first company to allow us access to search engines, and they make billions and billions in advertising fees because everyone used their products. Just like Microsoft was the first in commercializing operational systems. This is the first company that's going to be able to provide AI solutions on the blockchain, using the blockchain. And as you know, virtually every company on the planet is now going to migrate into some sort of a blockchain environment, whether it be for their product offerings, their data keeping, their supply management, their tokenization. Companies upon companies worldwide are patenting blockchain technology, and the reason it's so impactful is consider that let's take healthcare. When you have a machine learning your own body, and it's understanding that you have, for example, a sleeping issue, it starts thinking for you. It starts telling you, hey, at 10 p.m. that's your best time to go to bed because We've seen performance in the past 30 days. Your work performance is much better when you go to sleep at 10 p.m. Boom. Your life is optimized in that regard. When they tell you, hey, you need to, they can be connected to your nutrition, your carbs, your fat, everything like that. Less sickness in the world, less illnesses, which saves you money. Obviously, being healthy is much cheaper than being ill. The world is going to get so much better. Traffic, obviously, you already know, traffic is being it's being automized by AI. So the best route, who calculates that? Where's going to be the best route to go to work or to go anywhere? It's machine learning. But the future for it is much, much broader. And you can take anything that you do, and it's going to get better. Hotels are going to know better what floor you like, which angle you like. Do you like to see the sunset or the sunrise from your room? Vacations are going to get better. Everything is going to get, AI is just machine learning, supercomputers, and it's going to disrupt virtually every industry. We can go about this all day, just talking about this, but it's just the infancy of it. Siri and Alexa are very basic forms of AI, but the future for it is going to be much, much broader. So the beauty about it is it helps to optimize your life. Just think of stuff that you want to buy home, right? Like furniture or anything like that. AI is going to be able to give you the best days to go to shop, because they're going to know all the sales for you. You're not going to need to have a personal assistant telling you, hey, I need you to Google all the shops in my area, see which ones is on sale, because AI will take care of that for you. So it's going to help get the market to be more competitive. Prices are going to come down, and the world as a whole will get wealthier and richer. And it's just depending on where you are positioned with it, that's going to either determine whether you're going to be personally poor or personally richer from it. But the world as a whole is going to get much wealthier, if that makes sense. The world as a whole always is wealthier, but wealth is transferred and grown. So you want to be at the right side of every wealth transfer, and you want to be at the right side of every wealth growth. So this is one way to do it. This is the early days of AI, and I think Global Life Technologies, with the fact that they're launching with about 4 profitable, commercialized, revenue-bringing joint ventures day one, and they have a pipeline of potential JVs in the works just in the next year. This is the big time.
Yeah, I tend to agree with you on that one, and I'll tell you what, I'll make it easier for everybody. I'll put a link in the description below this video. Everybody needs to click on that. That is Wealth, if I'm correct, tell me if I'm right, wealthresearchgroup.com/live, L-I-V-E. Would that be right?
Yeah, that will be right.
Yeah, so I'll go ahead and put that right in the description. People can go ahead and click on that.
Perfect, perfect, because I know that sometimes, in these interviews, people tell me that it's very hard to get all the information. They need to kind of sit down and read.
Yeah, yep. Why not? It's a free report. Why not download that, check it out, read it, and everybody should do their own research and avail themselves of the latest research that Lior is doing over at Wealth Research Group. And check out the homepage while you're at it. Get on the newsletter listed there, wealthresearchgroup.com. All right.
All the updates on the company will be exclusively on the newsletter. That's right.
Absolutely. So Lior, let me ask you this. What is the biggest problem right now which has immediate ramifications for investors and savers?
Well, obviously, it's always hard to pin one isolated problem, because everything is kind of interconnected in the economy. But what I would say I am personally watching more than anything else is how the Fed is managing the tightening period. Every time that the Fed funds rate, the Fed's fund rate is the rate that the Fed allows banks to make overnight loans. Every time they are hiking it, at some point, if it catches up to the 10-year Treasury yield, there's a real slowdown, and then there's a recession. So it's a guarantee What you need to do is just watch it. Okay, I just landed here at my hotel room in San Francisco for the Warriors are going to have their championship parade, and it's going to happen tomorrow. So I had my tickets to Game 5, and obviously that didn't occur. But we're going to watch the parade here, the championship parade. But we just came in from the Grand Cayman Islands, and it's a tiny island. And what I wanted to tell you about this is that that island it has like a micro climate. You can be on one beach and it's sunny, beautiful skies, and then like 10 minutes away it's pouring rain. And our economy is kind of in the same way. There could be one market, like the artificial intelligence, that is rallying, while other markets or other sectors are correcting or plummeting. But once a year, if you go to the Cayman Islands, the entire island has a hurricane blowing over it. So there are times where nothing goes right except being out of the island. And that's why I like to own some cryptocurrencies and some physical precious metals for those times. But the rest of the year, the rest of the 11 and a half months, you don't need to prepare for the storm. You need to enjoy the beautiful weather. And it's kind of the same way in investing. If you own a sufficient amount of precious metals, physical precious metals, and some cryptocurrencies outside of the banking system, or some offshore real estate, or you own residential properties that are, producing rental income no matter what, and you're outside of the stock market, then you have those protection, that diversification protectiveness. But for the most part, most of the money is ever made for investors is made in the stock market, and you need to get involved. That's just a fact of life. So I am not selling my positions just because I know it's a tightening period, but I am watching the Fed's fund rate compared with the 10-year Treasury, because I know that once that catches up to it, then it will be time to either start using more short positions, or start taking profits on some companies that have rallied big, or cash up a bit more and make adjustments. So that is something that the Wealth Research Letter is totally focused on right now. The correlation between the Fed's fund rate and the 10-year Treasury, and how to use your portfolio for in light of that. So if you know that, if you're prepared for what's going to happen, you're going to be fine. We do not see a systemic problem or a reset coming anytime soon with the U.S. dollar system, etc. The Chinese GDP will probably eclipse the U.S.'s in about 5 to 7 years. So there's a lot of time before the negotiating table between China and the U.S. We'll talk about the reserve currency role of the U.S. And remember, only by 2038 will Chinese military spending eclipse that of the U.S. So the biggest military power right now, excuse me, which has much more political control over the rest of the developing nations, is the U.S. And therefore, with all the problems that the dollar has, it's still the best of the fiat currencies. And therefore, fear not systemic risk at this part of the cycle. What you should fear more is how stocks will behave in the next 10 years after having this 10-year bull market, a big bull market that in a few months will be the longest in history. And because in the future, I believe in the next 10 years, this is going to be one of America's better decades of the century. Before this really becomes the Asian century, I think this is the time to really make sure you juice up as much as possible, get as many profits out of the market as you can before this becomes a market that is going sideways and perhaps even correcting down. If you want to see my own allocation, my own portfolio, I created my own portfolio model at wealthresearch.com/portfolio, and you can access how I am building and anticipating to this.
Well, that's great. People can actually get access to your personal portfolio. That's fantastic. So I'll put that link in the description as well, wealthresearchgroup.com/portfolio to get a peek.
Yeah. But by the way, just so we're clear, the Fed's fund rate is about half the yield right now, half the rate of the 10-year Treasury. So it's going to take about a point and a half percentage-wise, or about 2%, for it to catch us up to it. And as you can see, they're hiking at about 0.25% each time. So there's about 5 or 6 hikes more to go before you really need to fear. So we have another year here, a year and a half. The market is definitely not rallying right now, but the bull market isn't over for general equities. So important to stress that.
Got it. All right. So wanted to talk about one of my favorite topics, cannabis.
Okay.
Are you bullish on cannabis at this time?
I am. Like I told you, cannabis kills. But what it kills is it kills sales for alcohol, and it kills sales for tobacco. That's the only thing it kills. So it's biting away. It's biting into these other recreational sectors, and obviously with this medicinal angle, it's going to start chipping at other sorts of medicine. So I'm very excited about this. Canada is going to legalize formally in July, it looks like, but the actual official date is probably going to be late August to early September. So I see a lot of that as bullish. The most important thing, though, is how cannabis ancillary businesses will react. So cannabis is not a regular commodity. When you take gold out of the ground, it's usually the variation between one company and the other is pretty minuscule. There's higher grades, sure, and lower grades, but that's about it. Gold is gold. It's a commodity. Now, agriculture is also a commodity. So corn, one type of corn and other type of corn, or coffee, the difference between them is very minuscule. Cannabis, it's going to get patented from the genome. So from day one, you're going to have hundreds of types of strains, and each company will try to protect it using IP, using international intellectual property, and they're going to try and license their particular brand and the particular strain to other companies. All of that all that record keeping will need to be on the blockchain. So I'm very excited about finding companies that will use blockchain technology to protect cannabis companies. Remember, the cannabis companies have to adhere to so many regulatory bodies, and so any company that will develop a software that is unique to the cannabis sector, I will be very interested in seeing how they do that. So that's one thing I'm very excited about. Obviously, low cost is always the most important thing as a grower. So I'm interested in low cost producers and how they're being low cost. And I think the real game changer, David, is what's going to happen when Trump says, okay, enough is enough. I want this entire country to start becoming legalized, because I want the big companies to come into the sector, make acquisitions, put a lot of money into R&D, and really find out what this plant has to offer, because we already know it helps with pain relieving, with all sorts of oils that people use, the hemp for industry, for paper, for furniture, for all that kind of stuff. And then, imagine both alcohol and cannabis were not legal, and then you legalize both of them in 2017, and then you hear that alcohol kills like 500,000 people a year. There's so much domestic violence. There's people are getting arrested because they're rioting. And then about cannabis, you hear that people are sleeping a little better. They're very chilled, relaxed, and nothing's wrong. So, people make such a big deal about cannabis, but the problem is not cannabis. I mean, no one is ever complaining. Now you have proof. So now you have Denver, Colorado, and the entire state of Colorado is proof. And now you see it in California as well. Tax revenue is going off the charts. High salary jobs are coming in. Lots and lots of ancillary benefits. The multiplier effect is coming in. So people are very excited about this, and I think it's coming. It's inevitable.
Well, I'll be watching for that for sure. Now, Lior, could you share with my listeners and viewers your overall strategy? I know that's a big question, but if you could sum it up.
Sure. So I think every investor should start by having a start over fund. So what I have is 12 months worth of living expenses outside of the banking system in cash, in duffel bags. Okay? And no matter what happens, I have my money split between 4 major currencies. So the U.S., the euro, the British pound, and the Swiss franc, and that is a start over. No matter what happens, you always have that. That's 1 year's worth. If there's a catastrophe, a reset, all the things that people are talking about, you have that set aside, and you're good to go on that part. And obviously, it doesn't even have to be a reset. It could be like a huge natural catastrophe, etc. You never want to use that money, but it's there if you need it, and it's accessible to you because it's with you. Either at your main residence or you keep some with you, whatever you're doing. Then I love to own about 2 years worth of physical precious metals. So I take my monthly burn rate, let's say it's 10 grand a month, just for the sake of it, and you multiply by 24, so that's $250,000. You buy physical precious metals with it. You never worry about that again. Don't try to trade it in and out. Just buy it, store it, pay the storage fees, and you're good to go. If there's a system reset or something horrible happens, you got precious metals. Obviously, you never want to use it, but if it happens, then you have that. So my allocation is about 80% gold, 20% silver, and you take that money and you take that fiat, convert it to physical precious metal, never worry about that again. So that's about people have different ways of doing it. I like between 4 to 7% of net worth, or 2 years worth of living expenses is fine for me. And then with cryptocurrencies, I just love having some just because it's easier to work with if you're ever in trouble, and obviously a little bit for the speculative part of it. I sold 90% of it in 2017 because these were generational returns. Like you made 20 years worth of gains in 1 year, and so that has helped me to seed round many companies in 2018 and get involved in venture capitalism, etc. These were enormous gains. So that's cryptocurrency right there. And then with about 70% of the portfolio, I always am involved with cash flowing companies. So it's either dividend companies or residential real estate or private lending through Peer Street or Lending Club. You just open an account. It's real easy. And I just focus on income. I want to know how much income is coming in, the dividends or the rental or the interest on the loans I'm making. So that is important to me. The cash flow is what's going to help you retire earlier with an asset base, and you know how much money is coming in, so you can plan your life. So like I said, if your burner is like $10,000 a month, you need to build a portfolio that is at least $10,000 a month, so you can stop whatever you're doing if you ever want to retire off of your own assets. So that's the way I look at that. And so about 70% in that. Why 70%? Because cash flow is the best compounder of wealth ever, especially dividend companies that are able to raise their dividends. Real estate, obviously, you buy a piece of real estate, its prices, it can fluctuate, but the value, when you have 4 walls around you, the walls are not getting better or something like that. So it's not a dynamic company. When you own a stock and you buy, for example, my first stock that I ever bought is VF Corp. It's a retailer that it's a manufacturer of clothing. For example, Timberland or Lee, Wrangler. These are all brands that it owns. So in the past 18 years since I bought it, they have quadrupled their dividends. The company is up tenfold, and if you keep reinvesting those dividends, then your internal rate of return is about, right now for that company, is about 70% a year. So if you take the price I paid for it in 2000 and see how much I'm getting in dividends right now, it's about 17% a year. That would be the equivalent of buying a house now for 100 grand and getting 17,000 a year in rents. So the way you do that is you buy a company you hold for the long term, and you keep reinvesting the dividends in the company, and the company keeps becoming more profitable if it's the right company, and then it hikes their dividend. It will be the same as a renter telling you, hey, I want to pay more each year on my rents on the same house. You do nothing. You don't have to do any renovations, nothing. But I will keep raising my rents. So it's financial magic, and that's why I love those companies. We talk about them at the Wealth Research letter, and also if you go to the website and you click on the top menu, you'll see one tab that says Wealth Stocks. Then I have a number of them that I'm personally invested in, and then if you look at the other one, it says Special Reports. It's like a huge library of special reports that have to do with that, among other topics. So that's two great ways to kind of have a weekend read of some of the stuff that works. And then with about 20% of my money, I love to stay in cash, just liquid cash, waiting for opportunities. So this is cash that's going to be deployed into opportunities, not like the cash I spoke about before, where you never want to use it. It's just cash sitting there. This is opportunity cash. So either from salaries coming in, business profits, whatever you have in life, you put 20%. You're always liquid. So then if something happens and there's a huge opportunity, you're liquid. Okay, and that is obviously the key in 2008, when all these companies were very, very cheap. If you stuck to that rule and you had 20% in cash, you could really have made big money. And then 10%, the rest of the 10%, I wanted speculating with game-changing opportunities. So it could be the resource sector, it could be the cannabis sector. For 2018, it's definitely the artificial intelligence sector. And most of that 10% is going to be invested in Global Life Technologies. Just one play, I'm going to put 10% of my net worth with it, because I am very, very confident that this company will be worth over $1 billion very, very quickly. And I think the IPO is going to be less than a quarter of it. So exciting times.
That is exciting. And finally, just to wrap it up, what's the number one thing every person should pay attention to right now, in your opinion?
Well, we kind of talked about the Fed's funds rate as compared to the 10-year Treasury. That's like what you need to focus on from a defensive objective. From an offensive objective, I want you to look at your day and kind of figure out where you can carve 1 hour, 60 minutes every day to read an investment book. And if you can do that, I believe that in 1 year, so that's 365 hours, you can be a superior investor. By June 10th of 2019, you can be a world-class investor. And it won't take you more than 10 books. And I can give you 3 of them right now that if you read, you will become, first of all, you'll never suffer catastrophic losses. You'll stay in the game. And staying in the game is half of the problem, and half of the solution. So if you stay in the game, if you keep investing the rest of your life, you're going to be that millionaire next door, that UPS worker from 1925 who took a few cents out of his salary, and he died having like a $8 million net worth because he kept buying UPS stock for the rest of his. It was like the janitor or something. So even if you don't have an amazing salary and an amazing career, just staying in the enterprise system and keep buying the best companies, or just keep buying the index. If you have zero time to research companies, just buy the index, buy the S&P 500. You will be that millionaire next door that ends up with a nest egg when you're 65. But I am 34, and my my thing is to be financially independent immediately, not at 65, right now, and have a great lifestyle. So that's why I speculate with about 10% of my portfolio. But for if people are looking for the long term, just focus on your education. So the one book I'd love to recommend is The Most Important Thing Illuminated by Howard Marks, a billionaire hedge fund investor. Read that book immediately. It's a very easy reading. Amazon Kindle or whatever else you want to do it if you want the hardcover. That's one book I truly recommend. And then once you're done with it, what's beautiful about Amazon is they always have this people who research this have also looked at other books. Take other books as well. One book I'm reading right now is called Value Investing, From Graham and Dodd to Modern Buffett and Beyond. And it talks about how value investing and what is value investing. And it's going to help you because it's going to make you more discerned. You're not going to jump on anything that people say. You're not going to jump on any opportunity. You're going to research companies. You're going to want to know why their competitive advantage is durable, why other companies will not eat them up. You're going to think more in the lines of a businessman, and you're going to own the best companies for the long term. Remember that when you own stocks, even one stock of AT&T, for example, you now own the company. You now own a piece of the company. So think about owning companies as owning businesses. You're not just trading paper. You really are an investor in these companies, and you really need to treat yourself that way. And I think these books are key. So carve 1 hour a day and do this, or just stick with the index, because the index is good enough. I mean, it makes 7.5% historically for 200 years. It's not going to change much. You're going to double your money every 8 years, and assuming you start with about $50,000 at age 20, you're going to be fine by the time you're 65. If you want superior returns, that is the reason I launched Wealth Research Group, is in order to get to that double-digit return annually, and beat the market by at least 50% a year, which I'm glad that we've done it for 2 years, and now, like you see, it's going to be 3 years going. So I'm very excited.
Yeah, that's great. Well, I've never had such access to your personal portfolio and your personal way of thinking, how Lior Gantz is allocating his own funds. He's not just talking the talk, he's actually walking the walk. And this is really great. I feel like I've had an exclusive interview here today on Looking at the Markets. Just want to recap those free reports because people always ask me to repeat those. It is wealthresearchgroup.com/live if you want to learn more about AI and the blockchain technology, artificial intelligence, machine learning, all that good stuff.
And it's a full report about Global Live Technologies, the company itself.
Yep, Global Live, which has its IPO Wednesday of this week, ticker symbol LIVE. And then, if you want to get even more insight into Lior's personal portfolio, it's easy to remember, wealthresearchgroup.com/portfolio. And you don't have to type all that out. Just click on the links in the description below this video. And, of course, get the newsletter. Put your email address in over at wealthresearchgroup.com. to get the latest on what's going on in the markets, because this is Looking at the Markets after all. Wow, what an interview this has been. Let's do this again soon. What do you say, Lior?
Not a problem. And David, again, thank you for your support. I know that in a previous life you were a teacher, and I know you're very dedicated to education, as am I. And that's my baby. That's my passion. That's why I started the Wealth Research Group letter, in order to get people more educated, because get out of the mindset that the government's going to take care of you, and just build a wealth machine, build a financial fortress so that no one can ever screw with you.
And that's the name of the game. Staying in the game, as you mentioned, protecting yourself, and getting that great research. All right. Thank you, Lior Gantz. I appreciate it. And let's do this again soon. Thanks a lot.
Thank you, sir.